Welcome back to Financial Market Insights for Traders. I'm Sophia, and today we're diving into one of the most powerful forces in financial markets, central banks. If you've ever watched a currency pair spike out of nowhere or seen stock indices take a nosedive in a matter of minutes, chances are a central bank announcement was behind it. Interest rate decisions, inflation reports, employment data, all of these economic events have the power to shake up the markets in an instant. So, how do traders prepare for these massive price swings? How can you position yourself ahead of these announcements instead of getting caught off guard? That's exactly what we're going to unpack today. What are central banks and why do they matter? Before we dive into the specific announcements, let's quickly cover why central banks are so important. A central bank is a country's main financial authority. It controls monetary policy, regulates money supply, and plays a key role in financial stability. These banks aren't like commercial banks. They don't serve regular customers. Instead, they set the economic rules that determine interest rates, inflation levels, and economic growth. Some of the biggest central banks in the world include the U.S. Federal Reserve, Fed, United States, the European Central Bank, ECB, Eurozone, the Bank of England, BOE, United Kingdom, the Bank of Japan, BOJ, Japan, the Reserve Bank of Australia, RBA, Australia, the Bank of Canada, BOC, Canada, the Swiss National Bank, SNB, Switzerland. When these banks speak, the markets listen. Key central bank announcements that move the markets. 1. Interest rate decisions. This is the big one. When a central bank adjusts interest rates, it directly impacts a country's currency and financial markets. Rate hikes, stronger currency, weaker stocks. Rate cuts, weaker currency, stronger stocks. For example, when the U.S. Federal Reserve raised interest rates aggressively in 2022 to combat inflation, the U.S. dollar surged while stocks struggled. But when rate cuts are expected, traders anticipate a weaker dollar and stronger equities. If you're trading Forex, stock indices, or commodities like gold, interest rate decisions should be on your radar at all times. 2. Monetary policy statements. After deciding interest rates, central banks release monetary policy statements explaining their outlook on inflation, employment, and economic growth. Hawkish statement suggests future rate hikes, which strengthens the currency. Dovish statement indicates future rate cuts, which weakens the currency. For traders, it's not just about what decision was made, but what hints are dropped about the future. 3. Inflation reports, CPI PCE index. Inflation is the enemy central banks fight hardest. If prices are rising too fast, they tighten monetary policy. If inflation slows, they ease up. The two main reports to watch. Consumer Price Index, CPI, measures how much prices are rising. Personal Consumption Expenditures, PCE, index, the Fed's preferred inflation gauge. If inflation runs too hot, expect rate hikes. If it cools down, central banks may start cutting rates, which impacts all major asset classes. 4. Employment reports, NFP unemployment rate. A strong labor market means more people are working and spending, which fuels economic growth. Central banks watch employment numbers closely. The most important report? Non-farm payrolls, NFP report US, released monthly. This is a massive market mover. Strong NFP report, more jobs, economy growing, potential for rate hikes, stronger USD. Weak NFP report, fewer jobs, slowing economy, potential for rate cuts, weaker USD. If you trade Forex, set an alert for NFP Friday. 5. Central bank press conferences. Even after rate decisions are announced, markets don't settle until central bank officials speak. The Fed chair, ECB president, or BOE governor's words can make or break a trade. For example, if the Fed hikes rates but signals they're done tightening, markets may rally instead of dropping. Traders analyze every single word for future clues. 6. Quantitative easing, QE, and tapering announcements. Quantitative easing, QE, is when central banks pump money into the economy by buying bonds. This boosts asset prices and weakens the currency. More QE, stocks up, currency down. Tapering, reducing QE, stocks down, currency up. When the Fed began tapering in 2021, the dollar strengthened and equities faced headwinds. Expect volatility whenever central banks discuss QE or tightening policies. How traders can stay ahead of central bank moves. 1. Use an economic calendar. Never trade blind. Always check economic calendars for upcoming announcements. Knowing when a major decision is coming helps you avoid unnecessary risk. 2. Protect your trades with stop-loss orders. Volatility can be extreme around central bank news. Set stop-loss orders to protect yourself from sudden market swings. 3. Trade with a fast execution platform. Seconds matter when trading central bank news. A platform with lightning-fast execution helps you enter and exit positions without excessive slippage. For ultra-fast trade execution during high-impact news events, trade with crystalballmarkets.com, a platform designed for serious traders. 4. Pay attention to market sentiment. It's not just about the numbers, it's about expectations. If markets expect a rate hike but don't get one, you'll see sharp reversals. Follow analyst forecasts and trader positioning. 5. Diversify your portfolio. Different asset classes react differently to central bank moves. Stocks, bonds, forex, and commodities all shift based on interest rate expectations. Balancing exposure helps manage risk. 6. Follow central bank speeches. Traders follow every word from Fed Chair Jerome Powell, ECB President Christine Lagarde, and BOE Governor Andrew Bailey. Speeches often hint at future moves, even outside of official meetings. Final thoughts: why you need to track central banks. Ignoring central banks is not an option for serious traders. Interest rate decisions, inflation reports, and employment data shape the markets in real time. By staying ahead of these announcements, using stop-loss strategies, and choosing a fast execution trading platform, you can trade with confidence instead of getting caught off guard. Take action now. Want to trade with a platform built for economic news volatility? Sign up with crystalballmarkets.com today for top-tier execution speed and the best trading conditions. Stay informed, stay ahead, and trade smart. I'm Sophia, and this has been Financial Market Insights for Traders. See you next time.